Welcome back to Golden Rule Radio. We've got Tori, Miles, and myself in studio today. Miles, let's get the weekly recap.
Let's take a look at what the prices have done since we recorded last Wednesday. Gold down slightly. I think we started Thursday around 23.24. It's currently 23.08. With a little bit of a bounce that we'll look at here. Nice little bounce coming off of some Fibonacci levels between the week, a second touch here. Silver up, opposite of gold. Silver from 26.40 up to 27.32. So silver up almost $1, and it's been pretty straight up for the last week. Silver's looking relatively strong. Will that hold going into the future? Platinum continues to beat palladium. Platinum from $9.58 up to $9.76. So platinum's up about $20 since last week and continues to show strength as palladium is holding nicely, even though it had some volatility, sitting at like $9.53 at time of recording. So we are finally starting to see that platinum palladium ratio swing in platinum's favor. And closing out, the S&P did have a bit of a bounce up around 170 points here over the last week, and the dollar is practically even, although slightly down, 105.7 down to about 105.5. So we've definitely had some movement, both up and down. Things that are up spent the week down, things that are down spent the week up. So we've had a little bit of volatility here over the last week, but I don't see too much changing in terms of some of the short-term trends we're expecting. So fellas, where do we want to start?
I think the most exciting is just that platinum palladium. We mentioned it last week, but it's actually looking like it's getting some legs here. Don't you think, Rob?
Yeah,
I mean,
I do.
The fact that it's closing there. So anyway, all that week-long activity, last week was just a hint. Maybe the proof's in the pudding this week, so we're going to keep eyes on that. Again, no move to make. I think, Miles, you did a great job on a chart last week and a few weeks before that, just kind of showing what our objective is. Rob and I and you are waiting patiently to recommend any ratio trade right now. But yeah, I'm encouraged with that. And then to me, the metals just seem
Flat.
Strangely strong, though. Like they're flat to me,
But they're
is
not
actually
dropping.
encouraging. Yeah, because they're not dropping.
Yeah. And there's enough news out there that could propel them higher, but I think seasonally, the spring market, the big push we saw this spring, that's pretty well done unless something blows up around the world. I think we're going to just be moving sideways into the summer market.
Yeah, I think so too. Nothing subjectively has changed for me.
No.
Objectively, Miles, nothing has changed, right, in terms of retracement levels or those support levels to the downside. So it's almost like we're just waiting patiently. I will ask you guys this, though, and Miles, you can point this in the charts. Are we setting lower highs? And does that mean anything to you?
Great question.
Well, let's look at them one at a time, and I actually think we should start where you did, platinum and palladium. So let's start with platinum here real quick. So talking about those highs, 990 to 1,000, that's been a bit of a bear for platinum over the last year. So we're looking at a 990 high in July and August of last year. We got to 1,012 in December, but then a significant decline all the way to, 875? We just hit 1,000 again back in April, and we're coming up on 990 again here probably in the next few days. So you're looking at a pretty aggressive ceiling right around $1,000, give or take $10. But it makes sense. I mean, I've mentioned this in shows past. Zeros don't actually mathematically mean any more or less than any other number, except psychologically they mean a lot. And when you start lining up a bunch of zeros in a row, like 3 of them at $1,000 platinum, that's going to be a psychological level for a lot of people. Getting back to what you were talking about, though, are we also seeing higher lows along with these higher highs? Well, if we get back and we look at what happened through 2023, again, looking at platinum, well, we clearly had a series of lower lows as it got down to an ultimate low back on November 10th, I think around 840-ish. But since then, we've had higher lows. We had a pretty aggressive reversal back up to that 1,012, 1,015 I mentioned by December. And after a pretty volatile correction, ever since February of this year, we've been sort of marching up. We've had 2 consecutive higher highs, 2 consecutive higher lows, and there's a good chance we may be pushing for our 3rd higher high as well. So we are starting to see that transition in the platinum. Obviously, with gold, we've already had it. With silver, we've been waiting for it. And with palladium, it's been down. But the one thing worth pointing out here, because I think it's the big question when you talk about platinum and palladium, we know palladium's coming down. We know one way the ratio can readjust itself is platinum stays 1,000, palladium goes to 500. That could happen. But it'd be real nice if platinum also grew while palladium is declining. And I think there's argument for that.
All right, well, let's take a look at silver and tell us what you see there.
Silver had a pretty good growth period, obviously this spring, from like 22.40 up to just shy of 30 back in April, and a pretty natural correction back down. We had a 50% retracement that it hit on May 2nd, which was here just last week. And we've had a nice bounce, a little kind of double bottom there on the 50%. We had a bounce up. We had a bounce on the 382 that you're seeing on the chart here, actually today. So we exceeded the 382 on the bounce back and came back down to it and back above it today. So silver is just a ball bouncing up and down a flight of stairs. It looks really healthy. It's following consistent numbers. It's showing growth trend. While I agree that in your traditional sell in May, go away period probably is going to hold true, the next major hurdle for silver to get above isn't too much higher than we're at now. It's about 27.75, and that would have been the high on the way down back on April 26th. We have to get above that price before we could even consider testing 28, 29, 30. But realistically, above that 27.75, there's a lot of runway. So if we do see a little push up in silver here, it's possible we could get a double top before we go into a summer decline, or maybe silver just keeps going. You know, sell in May, go away works some of the time. 60% of the time it works all the time, right?
Yeah.
But you can't follow those kind of patterns, seasonal patterns regularly. They're a starting point, not an ending point when you're talking about pricing discussion. And it's a very big year, both here domestically and internationally, and it wouldn't take a lot of news to push things to higher prices. So I'm scared to say it. I'm a little bit bullish on silver right now.
And I'm a little bit bearish on it, to tell you the truth.
And that's fine. We can change places from time to time.
Yeah, that's right. Are you saying that based on expectations seasonally? Again, nobody knows that big unexpected piece of news, right? That could rock the markets. But if everything stays the same, stays kind of where we are, and not a whole lot changes on the scene, are you kind of just feeling like it's needing to take a breath?
Yeah.
Okay. You know, what's
not
interesting
a big drop, maybe 26.5 or,
back down to kind of the support we tested before.
Correct.
Yeah, I can see that. I mean, that was the 50% retracement that Miles pointed out. And, silver's done it. Gold hasn't. And I'm hoping that silver having done it is an indication that gold is due to have it done, right? So I really want to see that 50% retracement from the cycle high, and we're just not there. Now it's encouraging that we're back up over the 382, but all that to be said, will it hold? And again, we are seeing lower highs as in the gold to silver ratio.
Yeah.
Every time it starts to climb, silver has this little rally, disproportionate rally compared to gold, and it drives that ratio down. So we crossed back below 85 this morning. And we'll see. I mean, I would love for that trend to continue. Most importantly, I don't care what the spot price does. I want to see that ratio tighten, right?
Yeah.
But Miles, I mean, is there any indication to you that gold is showing you that it wants to come down to that 50% retracement also and join silver at that support level before forming a base like silver did and bounce right back up to the 382?
Well, I think you could almost argue it has, just from the standpoint of silver and gold tend to do the same thing, but at slightly different times, and silver does it with more gumption, right? Just more volatility. Silver coming down to the 50% retracement, gold says, okay, well, we'll at least do the 382. So we saw gold hit the 382 fib, and then it bounced it again this week pretty aggressively in a single day candlestick wick type fashion. So yeah, I think you're seeing very similar pricing both directions. Silver doing the same thing gold is, just more volatility.
Well, one thing that I'm finding and talking to clients, if they bought 11, 12, 13 years ago, maybe even 14 years ago, if they bought gold, there is an opportunity for those people to actually sell some of their gold and add more ounces of silver. Because what did the ratio get back then? What's the time frame, Miles? Is it like from 2010 through 2013?
Well, looking at the charts here, you had the ratio dip kind of below the running average. I know Tori and I have talked about this rising midpoint in the gold to silver ratio, which is sitting in the high 50s, low 60s ish right now, as it's been rising. So right then, when we dipped below that point, it was between about 54 and 56 over a couple year period of time. This goes back to around October of 2010, and it ended up breaking back above it in April of 2013. So you had a pretty significant, 3-year period there where gold purchases in the maybe 35 or 40, probably 50, 55, but somewhere in that 20-point range there could translate into a decent chunk of silver ounces today, especially on the way back down. I know it was higher back in 2020, but realistically, it was still rising back then. Well, now it looks like it's probably starting to fall. And if that ends up being the case, you get in on that trend while it's moving that direction.
So if any of our listeners had bought gold in that time frame, they should probably give us a call.
Yeah, I agree. Let's walk through, just see your entry point. Everybody's unique. It's not like there's a carte blanche trigger. You got to weigh everything, including taxes, gains, that sort of thing, and what type of an account it's in. Works great in IRAs. So yeah, give us a call. And in the meantime, let's hope that these trends continue. Again, we want a little bit of a breather on the metals. We don't want it running away from us. Being able to average in and get more ounces over time as funds become available. And underlying fundamentals wise this week, there's not a whole lot to talk about. I mean, the non-farm payrolls data came out and it wasn't good. I mean, it was far worse than expected from the standpoint of the employment numbers. It was 175,000 jobs added and 240,000 was expected. So keep in mind, that's the other component that the Federal Reserve looks at when trying to determine whether or not to raise rates or cut rates. And so when inflation's out of control and employment is too hot, they need to cool both. And the one way they do that, obviously, is raising the interest rates. So they can't cut rates if the jobs market stays really hot. Well, because it came in really cool, the hope there, and the markets rallied as a result of the hope that there is an opportunity to take that data and say, all right, well, the job market's cooled enough. We've done our job. And here's the irony, and it's tragic, but Biden wants to increase the number of unemployed so that inflation drops, so that rates get cut, so that borrowing spikes, and so economic activity climbs, and then taxes get generated, and an election can get won. The way that cutting rates would make the economy look better and people would feel less pain on the backs of the people losing their jobs is just so ironic. And that's what, everybody needs to understand is, unfortunately, a record-breaking number of Americans are making emergency withdrawals from their 401k retirement plans. They're trying to cover their financial hardship in the middle of this ongoing inflation crisis. And all of this is being manipulated by the Federal Reserve. And it's creating this disparity where the poor are getting poorer. The people in debt are getting further in debt.
Yeah.
The people that have are having more. And the people that have not are actually having less. And so it's really unfortunate that all of this just for the sake of winning a re-election months down the road. And we haven't seen anything yet. If they cut rates, that's it. It's absolutely election interference, in my opinion. And it's going to rally gold. It's going to rally the equities markets. It's going to depreciate the dollar further. And it's going to reignite the flames of inflation.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell. Better yet, why not head over to our website? You can find more info at McIlvaney.com. We're also on Facebook at McIlvaney Financial or Twitter at ICA Gold. In the meantime, give us a call. Happy to talk about your precious metals portfolio. We can be reached at 800-525-9556. Thanks for listening and have a great week.